No. You can try using my phone if you want. What's up, everybody? Hello. Welcome to the stream. Started a little bit early. Hold on. Boom. Good mic now. This is going to be a good mic. Let me tweet that we are live for the market close. Yo, why are you listening to me, Tristan? Thanks, bye, my guy. All right, live market close. Let's see who shows up, if anybody does. Good. Where's 6 people watching. What's up? Ahad, what's up? Blue Chair, shut the market down. I wish we could. Torchier Fortune. I don't know how to say your name, but thank you for being here. All right, so, Chris, snow is up, huh? I didn't even check snow today. Let me just put this in my Discord. We've got some interesting stuff happening in the market right now. Hold on. Here we go. Okay, here we go. Richard, what's up? Thank you, everybody, for being here. All right, let's open up Webull. The market has ended around 200 points today, down. Now, the interesting thing about everything that's been going on is that two stocks in particular that I put in the title of this video I want to talk about that are acting in the polar opposite of each other, even on a day where the Dow is falling by 200 points. Swapnil, hello. Thank you for being here so much. I appreciate it. Keith, lots of buying opportunities in the tech sector, specifically semiconductors. I agree on that. We'll talk about semis in a second. Let's look at Facebook. Meta, oh my goodness. It's approaching its 52-week low. Meta is approaching its 52-week low. In fact, why don't we make a little Twitter video talking about this? Let's talk about this right now. Here we go. We're going to do this live. We're recording. All right. Wait, hold on. Oh, this sucks. All right, let me do it again. The reason I wanted to talk about this is because Meta is at a very interesting level. Okay. Hey, everybody. I'm on my stock market close today. Right now, we're looking at Meta. We have about 14 minutes till the market closes. Meta's trading at $150. I don't know if you can see that right there. You probably can't see it, but $150. And its 52-week low is 149.05, which means it's 95 cents away from its 52-week low. Meta has 3.4 billion DAUs, 440 million people using WhatsApp every day that hasn't even been monetized, $28 billion of advertising revenue. You're not going to go anywhere if you have to advertise a product outside of Facebook or Google. Meta is looking very interesting to me. Okay, so that's kind of what I wanted to say, right? Meta is looking very, very interesting to me. Now, the problem with Meta, and as you can see on the RSIs as well, the relative strength index, it is above a 30, meaning it is bought or is oversold massively, right? It's kind of screaming to buy. It's trading 11 times EV to free cash flow, which again is incredibly cheap. The market cap, $404 billion. They're doing $28 billion in revenue per quarter, about $120 billion in revenue in revenue for the year. That's a 3.6 price to sales. I mean, you just look at this company and you're like, what more do they have to do to really get people to see that the stock needs to be bought? Now, the problem is leadership and management, and people don't trust Zucks. And people kind of hate everything that Facebook has become. But Facebook still has all the users. They still got Instagram. They still got WhatsApp. And I think just on a pure technical analysis, or just a pure like fundamental analysis of EV to EBITDA, it's incredibly difficult to not think of buying Facebook. I've not associated my position. I bought it at 325. I sold it back in 240, which is probably a good idea. And I bought more Palantir with it, but it is interesting. Oculus is the best-selling gaming console. How do you value that in your model? I don't even put in Oculus, even though I probably should. When I think of Oculus, I think of the metaverse. I am incredibly not excited by Facebook's metaverse at all. I really need to see what they're trying to do with it. I still don't understand the vision, because the metaverse, in theory, is supposed to have a new home for our collective attention. I kind of see that vision. I also kind of don't believe in it personally. So I don't know. I think their core advertising business is phenomenal. And I think on that alone, this is probably a $700 billion company, not a $400 billion company. But the Oculus stuff is good, and the metaverse stuff is good. It's just not proven yet. So I think they are going to be a little bit more conservative that if we do get a whole macroeconomic crash, because then it's like, do we really want to worry about the metaverse? But we're ultimately going to see what happens. Oculus is not the best kind of stuff. Okay, well, maybe it is, maybe it's not. In comparison to Tesla, okay, this is interesting. Tesla is at 301, $900, $944 billion market cap, 900 post-split or pre-split. It is 11 minutes from the market close, and Tesla is still performing pretty well at $301, right? So the dichotomy here is some reason the market is not undervaluing Tesla, even though the S&P is what? Or sorry, they're not like punishing Tesla. S&P is at 393. So we went from 412 to 393. Tesla relatively stayed the same. It went from 269 to 300. So it actually went up as the S&P went down, and it was inversely related to the S&P. Facebook went from like 167 to 150, and it's literally at its 52-week low. I remember seeing Facebook in 2019, January, $140. Oh, look, SoFi. I just got a notification. SoFi is up 5.1% at 6.14 today. The market's acting in a lot of different ways. By the way, guys, Robinhood sent me a notification that said, need to send a last-minute Valentine's gift. I don't know what's funnier, them thinking that I actually have a Valentine or them sending a Valentine's notification in September, because February is far away from it. But nonetheless, it's interesting, right? It's interesting to see how that's reacting. And then you've got Google here. Google is $3 away from its 52-week low at $104. I mean, come on there. Come on now. Like, this is getting interesting. Google and Facebook are looking very interesting at these levels. And if they get lower and lower and lower, it's going to be juicier and juicier and juicier to think of buying them. Again, the problem to me with Facebook just comes down to, is the market finally going to just look past all the controversies that exist with this company? Because I think that's really there's nothing fundamental about the numbers. Absolutely nothing. Billions of daily active users, slight decline maybe, but when you're at 3.4 to 3.3, it doesn't make a big difference. $28 billion in advertising revenue. Everyone who needs attention posts their content on Facebook and Instagram. WhatsApp has hundreds of millions of users that use it religiously. I mean, it's quite difficult to assume that the market is misreading Facebook. Or it's quite difficult to assume the market is reading Facebook correctly, and that the, talking heads talking about all the Zuckerberg stuff, that he's an evil person, is correct. I mean, that could be right, but I don't know if that affects the actual fundamentals of the company. Did you read Bill George ripped about Meta? I did not. Ripped about Meta? I did not. I don't even know who Bill George is, to be honest. I gotta see who he is. So that's what's going on right now in the market. Let's look at a video as we get into the market close. We have about 8 minutes as the market closes. I have my bell today with me somewhere. Okay, it's right there. I'm gonna get that in a second. And we're gonna see kind of what's happening overall. Also, social media executives were testifying live in front of Congress. I don't know which ones. I don't think it was Zuck's. I think that would be bigger news, but it's some social media executives that were testifying today in front of Congress. Usually that testifying stuff doesn't really matter, but okay, let's look at semiconductors. One of you mentioned the their thing about semiconductors. Let's look at a clip on what's going on for semiconductors. Have you tried any of SoFi's products? Yes. So I've signed up. I'm still waiting for my thing to be approved, but hopefully it is approved soon. For their basic investor, you can buy stocks on it, that type of account I bought.
Yesterday, you said investors in semis are growing increasingly worried about a macro correction. That basically means a recession coming that will chill demand. Is that the big threat to these big stocks?
I mean, it is a threat, and it's a big one. Yeah. I would say investors are getting increasingly worried. We've seen this all year. The sector is broadly underperformed. It peaked almost at the very beginning, like January 1st of the year, and it's been underperforming all year, even as earnings estimates until very recently were still climbing, because investors were getting more and more concerned about the actual achievability of those estimates. We've now actually started to see some of the estimates start to roll over, particularly, as you mentioned, in some of these more consumer-focused areas, PCs, smartphones, graphic cards, GPUs, TVs, that kind of thing. And investors are worried that as the macro gets worse and there's still COVID lockdowns, and now we have issues in China and the Ukraine war and everything else, that these sort of things will start to spread into other areas.
You know,
we're starting to see some incremental signs. Yeah, go ahead.
Forgive me. I finish your thought, please, Stacy. I beg your pardon.
We're starting to see some incremental signs. So data center, for example, enterprise spending within data center is starting to get, we're starting to see a little bit, like Intel's data center business missed pretty terribly on enterprise. AMD, NVIDIA kind of mentioned it. Mostly the companies are talking about supply chain issues at this point. The server customers can't get all the parts they need, so they're having trouble building the servers, but it's sort of one start. Auto and industrial are holding in reasonably well, although companies like Analog Devices has started to change tone a little bit, talking a little bit about order cancellations. Personally, I've been worried more about stockpiling and double ordering in those kinds of markets because lead times have been so long, because it's been so hard to get parts. Shortages have been so much that companies in those kinds of scenarios tend to order more than they need. And I personally think that there's a lot of evidence in markets like auto and industrial that have been very strong that some of the demand we've seen is maybe not all actually going into end products. It may be stockpiling as well. So I'm nervous about that. That tends to bite you on the other side of it.
You know, I think why this segment is so important is that so many investors who are watching today probably either are in or have been in or have thought about getting into some of the very stocks that we're talking about here. The AMDs, the NVIDIA, a market darling if ever there was one a couple of years ago, Qualcomm, AMAT, Intel has been sort of dead money for a long time. We know the story there. What advice do you have for investors with respect to these stocks? What do I do if I own them? I've ridden them up, I've ridden them down.
Yeah.
What do I do?
You bet. So if you're in semis and you want to be in semis and you're cyclically nervous, I actually like Broadcom. So Broadcom doesn't have a lot of consumer exposure. The only consumer exposure they have is Apple. Apple's actually holding up okay. Most of what they have is infrastructure on the semi side, which is good. They have not been shipping everything their customers have been ordering. They've been deliberately under shipping because they're aware of what customer behavior tends to be like around these sorts of cycles. Their backlog is like $31 billion. It's more than a year's worth of semi revenue. So they've got a lot of runway there. They've got a big software business, sticky, mission critical, enterprise focused software that is much more stable and high margin. They're trying to buy VMware right now, which will bring the software semi mix to 50%.
And Broadcom's ticker is what, AVGO?
It's AVGO, that's right. It used to be a Avago. Highest margins, highest free cash flow in the industry. It's one of the cheapest things in the space. So that's something that I like. Other options, there are some of these more secular stories that are maybe exposed to some of these other energies, but they've been punished maybe a little too much. In my coverage, I throw in companies like AMD and Qualcomm into that category. AMD is exposed to some of these markets, PCs, enterprise servers, GPUs that have been weak, but they've been powering through like a champ because their product execution has been phenomenal. They're taking tons of share. And Qualcomm, look, anything touching a smartphone has been death. They make chips for that, but their mix within smartphones is much better. It's much more high-end. It's preserving them. And I think the setup for Qualcomm next year looks really, really good. They get more Samsung volume. Smartphone comparison will look really easy next year. And people are worried that Apple's going to go away. It may not go away. And it's 10 times earnings. Like, I don't think expectations are high at all for that one.
Wonderful insights, encyclopedia.
You made some good points. Made some pretty good points. One of the big points was about enterprises starting to spend again on data storage warehouses, which is good for companies like NVIDIA and AMD. The other thing is just like how you want to position yourself in terms of thinking of the macro with the demand that is going to be needed for semiconductors that we know is not really going away because everything in the world uses semiconductors and these types of chips and micro devices, versus the ability for those companies to actually produce and be able to keep up with that demand and also profitably still make their way quarter to quarter. NVIDIA, let's look at their ticker symbol right now. We have about 2 minutes till the market closes. 131. NVIDIA's gotten absolutely demolished. It was at above a 70 on the RSI when it was 346, which makes sense. And it was still there at, at what is this, 270, 80 bucks. It always felt pricey to me because it ran up like 400% in 2020 or 2021 in that September to November range. But now it's at a comfortable 43 at the RSI. One could argue that it's still a little bit undervalued from where it could be. NVIDIA and AMD are interesting. I personally don't know enough about the story of those companies to pull the trigger. I don't want to just buy them because they're a hot name. Where is AMD real quick? I always said I would love AMD at 80. Wow, AMD's at 77. Okay. AMD might be worth looking into. Wow, look at it. Oh, so it's 46 on the hours. I've always said AMD in under at 80 would be nice. Tesla in the 300s. That was quick. Yep. That was there. That was quick. All right. How long do we have till market close? We have about a minute. Put in the chat if you bought any stocks today. I did not buy anything. And also put in the chat if you have your eye on a ticker that's really interesting and you would want me to look into it a little bit. I have my eye on Google below 100. I've got my eye already on Facebook and just thinking $1,000 just because why not in Facebook at this point? I put a poll on Twitter today of just like, which one would you have, Facebook or Google? Google trading at 14 times cash flow, which it's only traded below that twice when it traded at 12 times cash flow. Facebook trading 11 times EV to free cash flow. Both are cheap, man. But like, if the macro gets bad and advertising gets bad, both can get even cheaper. So it's a question of what do you think? How do you want to pull your budgets? All right. On September 14, 2022, the stock market has closed. The stock market is closed. Let's check in on some basic tickers, see how they're doing as soon as we close. Tesla closing at 302, end of the day. Palantir and UiPath didn't buy anything today. Almost added a bit more to VTI, but decided to wait. That makes sense. Need more admit with the cowbell. Of course, man. John, I appreciate you. Got to have the cowbell. Bought iPod. I'm assuming you mean Apple. SQM, for the love of God, please go. Chris, people want the bell. Like, that is the thing that makes me different. I don't get how you don't understand this. People want the bell. SQM. Okay, let's look at SQM. First of all, let's see where Palantir ended. 763. Okay, up 9.4%. It hit $8 on Monday, and then CPI destroyed everything. SQM. What does this do? $113. Let's look it up real quick. SQM ticker symbol. SQM stock. SQM stock. This is a supplier of plant nutrients, iodine, lithium, and industrial chemicals. Let me show you guys this right here. SQM. On the 5-year, wow, this is a hell of a 5-year. 56 in 2017, a bottom of 20 or 15 in March 2020. Whoever found this in March 2020, if you're lucky enough to find it, you are up almost 8 times since then. 2.8 billion in revenue. They're in Chile. This is why the world is so big, bro. I didn't know about this company. I'm sure a lot of you didn't know about it, but it's on the stock exchange, right? And they do $2 billion a year in revenue. They're a pretty big company, and they're here. It's up 100% over the past 5 years. Gotta have more capital, of course. Check Snow. Yeah, I was just about to look at that. So let's look at Snow. Snow stock. Okay, so Snowflake is up 5% today, up $10. It's moving along with so it's so weird, right? The S&P, the Dow fell Dow fell 200 points. S&P fell. S&P didn't fall, but S&P didn't really do good or bad. But certain stocks trended upwards, like Tesla and Snowflake. Let's say Snowflake on the 5-year. Snowflake on the 5-year, they IPO'd at 240 in 2020. They ran up to 387. Then they ran up again to 392. And since then, they've been decimated. But they made a decent recovery from 119 on June 17th. June 17th was the bottom. And I'm so upset that I missed it. Now, can you ever time the bottom? No. But you can probably get closer to the bottom if you're decently, if you're just looking at certain stuff. And June 17th was the bottom. And I missed it. I don't know if you guys missed it or I missed it. I don't want to miss it again. I want to load up. I don't know if that's going to happen. We're going to have to see. Eric, could the explanation of the stock action dichotomy between Meta and Tesla be something as simple as Elon and Tesla are much more likable than Zuck and Meta? That is absolutely an explanation, Eric, for what's going on. I mean, at the end of the day, if the market doesn't like you and people don't like you, they're not going to buy your stock. People love Elon Musk. It's at the end of it, people love him, and the market has to internalize that love as profitable. People hate Zucks. And the market internalizes that as well. I was begging you to buy around June 17th. I know. I didn't listen, Matt. I thought the sky was falling. I can't. You said it was going to go lower. I did. I said we're going to 330 on the S&P. And granted, it really did feel like it was collapsing. But I was wrong. I was wrong. And a lot of people, I mean, it was such a weird time in that mid-June era because, and I was buying, by the way, I was buying Palantir at $10. Palantir is worse now, obviously. But yeah, I mean, it happens. I don't want to miss the bottom again. China investing heavily into Africa's mineral resources, minerals where the money's going to be as we start up this next gen of production. That is also true. And a lot of stuff going on with China and the United States right now. People don't love Elon. They love his products. Chris, I think you're slightly incorrect on this. Like, yes, you're right. They love his products, but the cult of Elon is the cult of Elon. It's not just the cult of products from Tesla, right? Or you think it's a product-based cult? Maybe it's a product-based cult. I think there's something about Elon that everyone just harps on. All right, let's look at another video. Let's see what the market is talking about. Let's see. Okay, here we go. Wait, no, we already saw this. All right, here we go. Let's look at this one. Looking at quality stocks over just regular names.
Joe, actually, all of you have some ownership on some of these names, but Joe, I'm going to start off with you. One of those stocks is Alphabet, another one, EOG Resources. The criteria here is strong balance sheet, stable sales growth, low EBIT deviation. Do you believe right now in this environment there is a such thing as quality, or is it just all a wild card?
No, I think there is in this environment a leaning towards quality and having companies in your portfolio that represent that. How is it exactly you look at quality, Frank, I think is very important. Obviously, I introduced an index that's called the Quality Momentum Index. So it's got those two factors. And identifying quality itself, what's important and integral to me is looking, as Goldman Sachs has discussed, things like return on equity, debt to equity, and annualized sales growth. So you invest in quality, you probably trade a little bit more in momentum. That's what I do. You combine the two factors together. And I believe over the long term, you're going to improve your performance. But in the environment that you're in right now, you, without question, need to lean towards quality. And a lot of the companies like EOG, Alphabet, and United Healthcare that's represented in the report, these are companies that I own. These are companies that are in the JOTI ETF. And it's warranted given the overall climate we're in right now.
Yeah, a lot of good stocks in here. Kara, you own two of them, actually, United Health and O'Reilly. Can you give us your thesis on O'Reilly? You're not concerned about inflationary pressures hitting people buying things for their cars?
First of all, we own so many of the names on this list, actually most of them, that I got a little scared people would think I work at Goldman Sachs. But the But on O'Reilly, O'Reilly has been such a good performer this year that I think I mentioned that we trimmed it, and people still drive, and perhaps they haven't bought new or used cars because the prices have gone up so much, but they have to fix their old cars. I mean, that's the thesis for the current environment. Right. But it's also a stable grower, nice cash flow. It's not a cheap stock right now. We still own a big position, not as much as we used to, though.
So one question about O'Reilly, and I have a lot of friends that I've been talking about that.
It's really interesting seeing them talk about stocks that are not the big names, right? Like O'Reilly's Auto Parts. Honestly, I haven't looked at it in probably months because, like, who the hell cares about it? But it performed well this year, right? Because it doesn't have to deal with inflation from necessarily from like an interest rates perspective. It has to do with, are people driving and are they going to need to replace stuff in their cars? And if they are, then people are going to buy from O'Reilly.
That talking about that with them. I can't get all my pronouns right. I had a lot of friends that moved far away from their jobs because they thought this work from home thing was going to just last forever. Now some of them have to move back. And a lot more people I know are actually getting back on public transportation and the train. A lot of the tailwind for O'Reilly was that everybody was in the car. They didn't want to take public transportation. Worried about that declining?
That's an interesting thought. No, because there's still many people who are working hybrid. And, in terms of driving, it's much more of a factor whether people are needing to replace parts in their car and need to maintain cars. And if they own them longer and people are owning their cars longer, that that will be a more important factor than this question of whether they're getting back on public transportation for the time being anyway.
Yeah, just a question from me and my friends. Jim, I'm going to come over to you. Another personal anecdote. I'm redoing my bathroom. Home Depot is one of the stocks on here. Where do you see Home Depot at now with this higher mortgage rate environment and people just aren't buying houses at the same rate they were?
Yeah, I own Home Depot. Look, it's one of these ones that, much as with the market overall, you're just going to have to wait it out. You can certainly sell it here, look for other opportunities. I don't think this is the right price to sell it at. And by the way, that's how I feel about the market overall. But Frank, if I can, I'd like to take this discussion in a slightly different direction.
Go for it.
Everybody has said, and we have to agree, quality matters. If you're a portfolio manager, of course, you're going to build the core of your portfolio in quality. One of the factors that is sometimes looked at as the opposite of quality is debt, as in companies that are indebted are somehow lower quality. And in the environment we're in, this presents an opportunity for stock picking because that's not a broad brushstroke that you can use. Where companies are indebted and they use that debt to build free cash flow generating assets, whether it's acquisitions or corporate capex, that can be a win. And there's a lot of companies right now that are either in a high free cash flow position or inflecting into a high free cash flow position that gives them the ability to pay down debt and buying those stocks where they've been beaten up. What am I talking about? I'm talking about Cleveland-Cliffs, Paramount, Boeing. Now, you have to have the core of your portfolio quality, but you can do some stock picking in some of these leveraged companies that have been beaten down where the market just hasn't cared about the free cash flow.
I know.
Interesting perspective. Interesting perspective, especially the idea of like looking to stocks that aren't like the big ones that are out there. Let's head back into Webull, see what's going on. Tesla still doing well, 302. AMD at 77. Chris says NYC is full again. Slow moving tourists of the world. Chris, are you walking right now? Literally. I was one of those tourists the other day. Oh yes, by the way, guys, Casey Neistat. I know you guys know who he is. He's back in New York City. They moved from California to New York. So New York is New York again because Casey Neistat is finally back in New York. Google ending a little bit above at 105. Meta at 150. Man, I feel like it's time to buy one of these freaking stocks. Like, it's not at least to begin DCAing into the position. I'm not going to time exactly the bottom. DNA finishing a little bit above 2. Look at DNA under freaking 30 on the RSI. I mean, I need to pull the trigger and buy this one as well because I've not bought it. I still have to read the short report. I don't get time to read the short report. It competes with AMRS, which is another thing I'm trying to understand a lot more deeply. From a technical perspective, DNA, at least on the RSIs, looks way better than AMRS, but we're going to see where that goes. Let's watch one more video. This is about owning growth at a quality and Facebook can buy, though I think it is at this trading 11 times EV to free cash flow. At this point, it's cheap. Like, it's cheap. It's just, there's nothing much to say. It's cheap. Your boy Tom dropping a video while you're doing a live stream. Me and Tom are actually doing a podcast at 4:30, the Can You Learn to Speak My Guy podcast. So if you want to check that out, just YouTube Can You Learn to Speak My Guy, and it'll pop up. And 4:30, I'll be live streaming with Tom. NYC just hits different every time I think I'm out. They pull me back. And yeah, man, Casey Neistat was in NYC for 20 years. He went to LA, and it was miserable. It's like, it's LA, bro. It's not that. It's just LA. Like, New York is where the beauty is. All right, let's look at this one.
Following yesterday's dramatic more than 1,000-point slide, 2 veteran market players say the best way to navigate this market is to focus on profit potential and cash flow. Joining us now, David Traynor, New Construct's CEO, and David Leibovitz, a global market strategist at JP Morgan Asset Management. Mr. Leibovitz, we got 2 Davids, so I may stumble, but we'll do our best. Mr. Leibovitz, I'm going to ask you to start first. Profits are one of the drivers of stock prices. The other driver is how much people are willing to pay per dollar of profit, right? That's the multiple there. How do you separate the profit-making companies that are priced well from the profit-making companies that aren't?
So I think when we think about the profit story going forward, we see two separate types of companies that we think will be able to deliver quality and consistent profitability against the macro backdrop that we see playing out. On the one hand, we want to own companies that we believe have pricing power. In an environment where input costs are rising, whether those be commodity prices or other inputs, we want to own companies that will be able to pass along those higher prices to the end consumer. And so that would be deemed to be a high quality profit stream that we'd be willing to pay for as we look into the end of 2022 and the beginning of 2023. On the other hand, we do think that there's an element to this where looking at the ability of companies to generate profits over time gives us a sense of their ability to generate, streams of profits going forward. And so a lot of those all-weather growthier names, some of the technology names that have sold off quite aggressively so far year to date are looking interesting to us as well. As you put it, Tyler, it's really about owning growth at a reasonable price. And we either want to understand and recognize that these companies have pricing power or historically have been able to deliver key profit streams almost irrespective of the macro environment.
Before we turn to David 2.0, I want to follow up with you, Mr. Leibovitz. You say you want companies that have profit-making ability, but also pricing power. Where are those companies clustered, or name me some as examples that are not necessarily stock recommendations by you, but where are they clustered, or give me some names that give me some idea of who has pricing power and profit?
Absolutely. So one of the metrics that we always look at to kind of gauge pricing power is operating leverage. We basically want to understand what the impact on a company's bottom line will be from a given acceleration in revenues. And the more pass-through you have there, again, the more pricing power we would deem that company to have. And so if you look at operating leverage by sector, this leads you to the energy space, the materials space, the financial space, but I think it's a little bit too early there to be diving in, and consumer staples as well. And so, a lot of the pricing power we see is on the value side of the style box. And then again, we do see opportunity on the growth side as well, given that re-rating and valuations.
Gotcha.
And so, David Trainer, as you're looking at evaluating stocks, you say we need to understand fundamentals, of course, but technicals too. But then you make the point that charts don't always work in this environment. So how are you evaluating technicals then, since we got a little bit of the fundamental picture from Mr. Leibovitz?
I think the technicals are telling us that, the easy money days are over and fundamentals are going to be more important. Look, I mean, at the end of the day, being able to understand the truth about profits is fundamental to being a successful investor in the long term. And the technical tape has been ugly for several months, for even over a year or so, right? It's not been the straight up market that we've learned to enjoy over the last 10 years, which I think means investors, if they want to trust what they're investing in, need to really understand things like pricing power in the past, which is, hey, are margins positive? Have they ever been positive? And for a lot of companies, the answer is no. And it's not always as easy to understand margins as people think, because companies have a way of cooking the books legally, by bearing important information into footnotes and the details that most investors never take the time to read.
Shepard Smith here. Thanks for watching. See you.
I know you guys love Shepard Smith, bro. Don't front. At the end of the video, you don't exit out immediately. You let Shepard Smith say, Shepard Smith here. You got to let him at least say that. All right. So, yeah, I mean, a lot of this comes down to fundamentals, because the technicals are telling us that the days of easily buying stocks are kind of over. Chris said our first in-person podcast should be who is the best homeless people, LA versus New York versus Seattle. That's a great topic. Me and Chris are starting an in-person podcast. He's in New York. I'm in New Jersey. So that's going to be super fun on this channel. It's going to be, different stuff we're going to be able to do. Showcat, thank you for being here. I'm just trying to dollar cost and not to get too excited and blow all my money. I agree. That's why I didn't buy $1,000 of SoFi on Monday. Bought like $500, $250 afterwards, and just keeping going down there because the pain is not over. Chris also says Tom and Jeremy may be responsible for some of those homeless folks. It's probably true. I might be as well for one. But the tattooed chefs and some of them, they might be more homeless because of Tom and Jeremy. Well, the far left would say if you have any money, it's your fault for the homeless. That's true. That's true. Tesla held strong today. DRK, Tesla held very strong. I mean, this was a phenomenal day by Tesla. I did not expect Tesla to do as well as it did today, and it just did it. I know the pain is coming, so I'm being patient. Yeah, I mean, I have a video coming out in probably like 10 minutes talking about the Elon Musk, Cathie Wood dilemma, or the little date they're having on Twitter, agreeing on everything about deflation. Obviously, they have a bias for why they want the Fed to stop raising interest rates because it hurts deflation. It hurts inflation. So they have to create a narrative that says deflation is happening. But I don't know if that's true. All right. I think that's it for us today, guys. Let's last quick look at the market. Everything seems pretty reasonable. Nothing too crazy in the after hours. Tesla 302, Palantir 763, Nvidia 131, Facebook ending up a little bit higher, 151, S&P 394, Google 105, SoFi, where was it at? 615, I think, 617. Yeah, pretty much normal stuff. Twitter is still at 41. We still have to learn what happens with that. And things are pretty much ending out like that. So that's it. I'm heading over to live stream on the Can You Learn to Speak My Guy channel. If you literally just YouTube Can You Learn to Speak My Guy, by 4:30 we'll be live there. And that is a show not about stocks. It's not about anything. To be honest, it's just me and Tom kicking the shit and having a fun time and talking about whatever. So if you want to chill around with us, you can come on that channel. We'll see you there. Thank you, everybody, for joining Market Close. And I'll see you at night around 10 o'clock for late night stock talks. So I'll see you guys then. Bye-bye, everybody.